Good morning, this is Anka Metcalf with TradeOutloud.com. Welcome to the pre-market game plan for the major futures indices, gold and oil for today. It is November 29th, it is 9:05 a.m. Eastern Time, and we're going to begin with the mini Dow Industrial Average, which is up 83 points on the day, 0.35% on the day. The breakout happened at midnight, and the break of 820 area had led to a surge all the way into a new all-time high, 23,898. That was set at 8 o'clock Eastern Time. Further targets for today, 24,000, and it seems that it is poised to continue into the 24,000 area, whether it's going to do it today or whether it's going to do it in the next few days. That is the next projected target area for the mini Dow due to the phenomenal surge that it had yesterday to following at 2 o'clock. So we had the pullback that happened, news pullback that happened on North Korea launch missile. And then it dipped a little lower into the 620 area, and then it got bought back again. So we see here a 180 reversal onto the hourly chart that promoted a move to the upside into the afternoon hours. Right now we are into resistance right here where we're trading at 23,900. However, like I mentioned before, 2,400 is the next projected target areas. In terms of pullbacks, we will be looking at 850 level for possible pullback, 850 to 860, that is the cushion area. Or on a steeper pullback, 23,828. This is going to be the next pullback that we're going to be looking for a possible leg in. Even on small time frames, this move has happened very, very smoothly and swiftly to the upside. So you could see a slow grind to the upside continuation. It's a huge accumulation at this point right now. Let's take a look at the S&P 500. S&P 500 as well, not as strong as the mini Dow, is up 2.2 points on the day, 0.09% is one of not one of the weakest. However, it is quite in sync with the mini Nasdaq as of right now. Mini Nasdaq, which is red on the day, it's 2 points down. So looking at the technical chart pattern, pull back into the 26.5 level would be considered as a next possibly buy area as of right now. YM overextended. We will look at a fade into the New York trading session, most possibly, depending on how the rest of the minis, and I'm talking about the S&P 500 and the Nasdaq, will be shaping up for today. So pullback areas, pullback buy areas to watch are going to be 26.26 and also 26.25. Further targets for the mini S&P 500, we're going to be looking at 26.36. All right, let's take a look at Nasdaq. Nasdaq for the day, red. You could see 2 points down. It was 2 points and a quarter, 1.75 as right now. It is just calibrating itself, set support here at the 64.13. And in fact, this is yesterday's scalp level that we have executed into the signal service from 11 to 16. It did have the major dip, as all of these indexes have had on that news. The Korea missile, and now setting support once again at the 64.11 area, between 64.11 and 64.15. This is the cushion area. We will look for possible buys into this area. However, it looks like Nasdaq has reached an exhaustion level as of right now. But we see very clearly that this pattern from 64.13 to 64.20 may be tradable for scalps. If we reach 30 and on a break of 30, obviously we do have room to continue higher into 64.40, 64.55. These are the next projected targets. RTY moving in sync with the E-mini Dow benefiting the most from the tax reform, and we've had the most shallowest pullback in Russell yesterday, 2 p.m., and a massive launch to the upside that propelled it to new highs, all-time high set at 8 o'clock, 1542. The next pullback that we're going to be looking for is the 1538 level. So far, very, very extended. And keep in mind that Russell and E-mini Dow are uberly extended as of this moment, and they have had continued rally for the last 6 hours. So keep that in mind. Possible fades that may take the price into 1538 may be possible. However, I would prefer to wait for the pullback and not really go against this really massive powerful trend that they have going on right now. Further targets of 1546, 1550, and 1555. These are the next projected targets, and there's a lot of accumulation coming in right now into Russell as well. Let's take a look at CL, and oil right now is very sideways, bouncing off the support level of 57.45. Running into resistance at 58. Keep it in mind, 10 o'clock oil number, 10:30 oil inventory numbers are going to be out, so I don't want to have to do anything with CL before that time. So quick scalps may be possible, but very whippy, very, very whippy. For the last 2 hours, 57.65 has been the support area, and bouncing off into the 80s, and ultimate target is going to be the 90s. So this is the scalp zone right here. Don't be caught into while the oil numbers are coming out. And now let's take a look at gold. We have closed a swing in gold, and so far it has traded at 1300. We did have an ultimate target of 1305, perhaps 1307, but we're going to be waiting for another leg in. Most likely we're going to be looking at the 1285 area once again, pull back into the 1285 area for a rotation that can carry the price back into the 1295 for a first target and 1300 for a second target. This is all for now. Thanks so much for tuning in. For more trading ideas, follow us on our private Twitter feed, and also keep in mind that we have a new power income day trading class in which we teach all these strategies that we trade, and there are actually 10 strategies that we teach along with the complex system of trading. And if you're interested, feel free to visit us on tradeoutloud.com/futures for more information. If you would like to register, or if you would like to hear more about our class curriculum, feel free to email us at info@tradeoutloud.com. Keep in mind the class starts on December 11th. It's the last class for the year. So why not start 2018 educated and start making money in the futures market now that we have Bitcoin coming to the futures market as well. It's going to be very exciting 2018. Thanks so much for tuning in, and I'll see you for more trading ideas on our private Twitter.